In 2023, Mexico attracted over $36 billion in foreign direct investment. Bank of Mexico 2023, a record amount. Much of this capital is not going to resorts or oil fields. It is flowing directly to a handful of states along the U.S. border, transforming the landscape with new factories. This is nearshoring in action. As global supply chains realign away from China, Mexico is emerging as the winner. This shift is bringing a wave of high-skilled manufacturing jobs to Mexico's north. But the sudden boom is also straining local infrastructure and causing industrial real estate costs to spike to historic highs. The story of nearshoring is a story of risk management. For decades, companies built complex supply chains centered on China's manufacturing prowess. But two major shocks revealed the weakness of that system. First, the U.S.-China trade war introduced tariffs, making goods from China more expensive. Second, the pandemic created unprecedented logistical chaos. Ports were jammed, shipping costs soared, and production halted. Suddenly, proximity and predictability became as important as low cost. This is where Mexico's advantages begin. The country is a member of the USMCA, the United States-Mexico-Canada Agreement. This trade pact gives Mexican-made goods tariff-free access to the world's largest consumer market. The USMCA also has strict rules of origin. For a car to be sold tariff-free, 75% of its components must be produced in North America, USTR 2020. This forces companies to move not just final assembly, but their entire supplier network. Geographically, the advantage is obvious. A truck can drive from the industrial heart of Monterrey, Mexico to Dallas, Texas in less than a day. A container ship from Shanghai takes weeks. This proximity has turned northern Mexico into a massive industrial park. The state of Nuevo León, home to Monterrey, captured 75% of the new investment announcements in 2023, Mexican Secretariat of Economy, 2023. This boom is driven by specific industries. Mexico is already the world's fourth largest exporter of auto parts, OEC 2022. Now the transition to electric vehicles is fueling a new wave. Tesla is building a $4 billion gigafactory outside Monterrey. Further west, in states like Baja California and Chihuahua, electronics and medical device manufacturing are dominant. The result is a scramble for space. In key markets like Ciudad Juarez and Tijuana, industrial park vacancy is effectively zero, below 1% CBRE 2024. This intense demand has caused industrial rents to jump by over 30% in some border cities in a single year, JLL 2023. Skeptics argue the nearshoring narrative is overblown. They have a point. A large portion of Mexico's FDI figures are not new companies arriving, but the reinvested profits of firms that have been in Mexico for decades. In 2023, these reinvestments accounted for 54% of the total FDI, Bank of Mexico 2023. This suggests an expansion of existing operations, not a complete relocation from Asia. Furthermore, the benefits are not shared equally. The intense focus on the north widens Mexico's long-standing economic divide. While northern states boom, southern states like Chiapas and Oaxaca receive only a tiny fraction of the investment. This concentration of industry in an already arid region creates a critical vulnerability. The new factories and the cities growing around them demand immense amounts of water and electricity. In 2022, a severe drought forced the city of Monterrey to ration water, even compelling breweries to donate their well water to the public. Associated Press, 2022. This problem will only get worse. The new Tesla plant alone will be a major consumer of both water and energy in a region already facing shortages. This creates a fundamental tension. The economic logic of nearshoring points squarely to northern Mexico. The environmental logic reveals its limits. Can Mexico's government upgrade the country's water and energy infrastructure fast enough to sustain this boom? Or will resource scarcity be the factor that ultimately cools its red-hot border economy?